Welcome back to the Daily Stack. Today, it's August 19th, 2025. This is not financial advice, because if it were, I'd be legally obligated to tell you my stop loss is emotional. My portfolio is 80% vibes, and my last green candle was in a scented candle store. We're 3 days into a pullback, and everyone's acting like it's the final boss. Bitcoin's in digestion mode. Ethereum's tap dancing above CME gap. SHIB's lighting another bonfire, and Wall Street's doing what they do best, panic on camera. Bitmain just scooped up more Ethereum than most nations hold in gold reserves. Injectives turned GPU time into a leverage playground, and while the majors go quiet, the Layer 2 wars are heating up like your phone on a Solana mint. Let's stack it.
Shadows grow tall, hustling through the dark, trying not to fall. Said, keep it safe, keep your dreams small. But I saw the world and I wanted it all.
This isn't a random red day. Bitcoin's been gliding lower since Saturday. Smooth, controlled, and just annoying enough to wreck your weekend long without being dramatic enough to scare off the tourists. It's not blood in the streets, it's more like a drip in the DMs. Everyone's staring at the charts like they're waiting for a punchline, but no one's laughing yet. Ethereum isn't moving fast, but it's moving closer to a CME gap at 4150 that hasn't been filled. Yet. Ethereum's hovering above it like a cartoon coyote, legs spinning in mid-air before the plunge. You can almost hear the meep meep. If we dip, the gap's probably going to get filled. Bounce from there? Cool. Lose it with volume? That's a 4K retest territory. And is ETH dead? Thumbnails on YouTube. This is coiled price action, and coiled price action doesn't whisper. It bites. While retail's arguing over whether or not it's safe to buy the dip, Bitmain Immersion just went full Giga Chad and bought 373,000 ETH in 1 week. That's $1.7 billion worth of Ethereum stuffed into a digital vault like they're prepping for monetary apocalypse.
But SharpLink was the first Ethereum treasury. That was announced in May, so we're behind. We came after SharpLink. But I think that, Ethereum itself makes a lot of sense to do as a treasury play because one, if you're positive on ETH itself, then that's the reason to do a treasury strategy, especially over an ETF, because the functions of a treasury strategy let you stack more ETH. But the second is ETH, I think actually that because of staking and the proof of stake, that these treasury companies are essentially infrastructure companies, and in exchange you're getting paid, a yield for native staking, and that makes them into real businesses. Like for instance, the over $3 billion worth of ETH that we hold today, you would earn native staking over 3%, and that's essentially GAAP net income.
Their total stash, 1.5 million Ethereum, worth over $6.5 billion, more than 1% of the total Ethereum supply.
But the third reason, of course, is that, it's important to create scarcity. I think that the story that we have at Bitmain is one of scarcity because we have a very clear strategy of trying to acquire 5% of ETH, and we have a pristine balance sheet. I think that's a big advantage. And the stock is super liquid. It trades $1.6 billion a day, which makes it the 42nd most liquid stock in the U.S. stock market today.
No flex tweets, no threads, no just scoop comments, just the most gangster treasury move since Saylor learned how to click buy Bitcoin. In Wall Street, naturally, they dumped the stock 7% this week because TradFi still thinks Ethereum is that coin your nephew mines on his Xbox. Wall Street isn't just worried, they're actively lobbying the apocalypse. The new fear flash, $6.6 trillion in bank deposits, could evaporate if stablecoins are allowed to offer yield. That's not a TikTok conspiracy. That's JP Morgan and the banking giants whisper yelling at Congress like the DeFi boogeyman just walked into the room. They're warning that if yield-bearing stables get regulatory approval, people might move their money out of banks. Like that's not the whole point. They're tying the warning to the recent drop in Bitcoin, Ethereum, and XRP, blaming macro fear, liquidity gaps, and potential outflows from the financial system. It's not a whisper though, it's a megaphone. The banks are sweating in public, not because they don't understand crypto, but because they actually do. So is it full-on panic? Not yet, but it's definitely public freakout with a suit and tie. And in crypto, that's usually your cue to look for the quiet buys behind the noise. Welcome to the Layer 2 scaling Thunderdome. While Ethereum floats and Bitcoin drags its feet, the Layer 2 wars are heating up like your graphics card on full send. Base is pumping user numbers, fees like it's chasing Arbitrum's lunch money. ZK Sync is quietly onboarding projects faster than you can say succinct proof. And Optimism restructuring its incentive model before the next airdrop meta kicks off. Gas fees are chill on mainnet right now, but everyone knows that's temporary. Whoever gets sticky user activity now wins when it matters. This isn't about just speed. It's about mindshare, liquidity, and memes per minute. Watch where the devs go, follow the fees, and for the love of Layer 2s, stop sleeping on the ones that are building quietly. And let's talk about Injective. Injective is letting you long or short NVIDIA H100 rental prices. Yes, we've officially reached the part of the bull run where you can take leverage on compute power like it's an altcoin. This is what happens when AI meets DeFi at the club and no one tells them to leave. It's niche, it's weird, and it might just be the start of real-world asset speculation 2.0. If nothing else, it's a killer conversation starter at your next DGen brunch. And that brings us to the tip of the day. Volume exposes the intention. Want to know who's actually moving the markets? Watch the volume. If a coin is dumping and the volume is surging, that's not Karen from accounting panic selling, it's whales loading up before the headlines catch up. Look at DYDX and IO.net today. Price down 6%, volume up 80%. That's not a collapse, that's quiet conviction. Price shows emotion, volume shows strategy. Let's talk about Shiba Inu, because we got to cover memes just a little bit here on the stack. SHIB isn't trending, but it's burning. The burn rate jumped 2,000% in 24 hours, with 4.7 million tokens incinerated like a meme-powered sacrifice. Then, just to really make it weird, a whale moved 38 million worth of SHIB into cold storage. You don't make a move that size unless you know something or unless you're insane. Either way, the setup is real spicy. It's not mooning yet, but it smells like someone's lighting a launch pad. So what did we learn today? Bitcoin's still bleeding slowly, but not broken. Ethereum's tap dancing above a CME gap that wants revenge. BitMine just became a one-company liquidity sink for Ethereum. Wall Street out here screaming stablecoins will kill the banks like it's a bad thing. Layer 2s are entering full-blown attention war. Injective's giving you the chance to leverage trade cloud compute. SHIB is combusting and nobody's watching. And the real signals, they're in the volume, not the vibes.
Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred.
This isn't chop. This is the build-up before the breakout. Stay sharp, trade smart, and don't get baited into fear cycles. That's how they shake you out before they stack. So, stack smart, stack daily, and I'll see you DGens tomorrow.
Stacks on the rise, yeah, the future's gold. Crypto in my pocket, stories untold. Every coin's a brick, every block a scroll. Building up my freedom, gotta keep control.